Indonesia's currency, the rupiah, has been losing value recently, falling to levels not seen since the Asian financial crisis of the late 1990s. For many Indonesians, this raises an urgent question. Does a weakening rupiah spell economic trouble ahead? Well, to understand that, let's first start with the facts. The Indonesian rupiah has indeed taken a noticeable dip in value against major currencies like the US dollar. In early April 2025, the rupiah briefly traded around 16,860 rupiah per $1, its weakest level on record. To put that in perspective, the last time the rupiah was anywhere near this low was during the 1997-98 Asian financial crisis, when it hit approximately 16,800 rupiah per USD at its worst point. Even during the COVID-19 shock in March 2020, the rupiah's nadir was about 16,550 rupiah per USD, meaning the recent slump went beyond the pandemic low. In other words, by April 2025, the rupiah was hovering around 27-year lows, a level that understandably grabs headlines. In more everyday terms, a dollar bought you roughly 15,000 rupiah a year ago. Now it might get you 16,500 to 16,800 rupiah. That's about a 10% drop in the rupiah's value against the dollar over the past year. Just since the start of 2025, the rupiah has depreciated over 4% against the US dollar, making it one of the poorer performers in Asia. By comparison, other regional currencies also weakened in this period. For example, the Japanese yen and South Korean won each fell about 6 to 8% against the dollar. But the rupiah's drop has been a bit steeper. It's currently considered the worst performer among major Asian currencies for the year to date. Unsurprisingly, this currency slide has rattled financial markets. In April, when the rupiah neared its record low, Indonesia's stock market tumbled and foreign investors pulled money out of Indonesian assets. Bank Indonesia, the central bank, had to step in to stabilize the situation, using its foreign exchange reserves to prop up the rupiah and calm investors. These interventions had some effect. For example, after the central bank's actions, the rupiah bounced back slightly from approximately 16,880 to approximately 16,600 per USD in late April. But the currency remains under pressure and well below its levels of a year or two ago. To many observers, such a decline raises red flags. Memories of past crises, especially 1998, when a free-falling rupiah was accompanied by banking failures and soaring prices, are still vivid. However, a weaker currency isn't automatically a crisis. Currencies can and do fluctuate for many reasons, and modest depreciation can even have some economic benefits, like making exports more competitive. The key question is whether the rupiah's recent fall is a symptom of deeper economic problems that could seriously hurt Indonesia's economy, or if it's a manageable adjustment to global conditions. To answer that, we need to understand why the rupiah is weakening in the first place. Currencies don't rise or fall in a vacuum. The rupiah's value is influenced by a mix of global forces and domestic factors. Let's unpack the most important ones driving the rupiah down lately. The first is US interest rates and a stronger dollar. This is perhaps the biggest factor, and that is external. The US dollar has been very strong, and that often pushes down emerging market currencies like the rupiah. Why is the dollar strong? Because the US Federal Reserve, Fed, has been raising interest rates aggressively to fight high inflation in the US. The Fed's benchmark rate once stood at about 5.25 to 5.5%, the highest in 22 years. Higher US rates tend to attract investors to the dollar for better returns on US bonds and deposits. And conversely, money often flows out of countries offering lower returns. This global shift pulls down currencies like the rupiah as investors sell emerging market assets and buy dollars. Indonesia has indeed seen capital outflows, foreign investors withdrawing some funds from Indonesian stocks and bonds, which has weakened demand for the rupiah. This dynamic isn't unique to Indonesia. Many Asian currencies have lost value against the surging US dollar over the past year. Another global factor is the overall mood of investors. Lately, that mood has been skittish due to trade tensions and geopolitical flare-ups. Notably, a new trade spat between the US and Indonesia made headlines in early 2025. The US announced steep tariffs on Indonesian exports, part of a broader trade offensive reminiscent of the 2018 trade war. In response, Indonesia faced the threat of a 32% reciprocal tariff on its goods, though a temporary truce, a 90-day freeze on new tariffs, was reached as negotiations continue. Even the prospect of these tariffs sent shockwaves through Indonesia's markets. The rupiah plunged to record lows and Jakarta stocks sold off until news of the tariff delay provided some relief. Trade wars hit the rupiah by undermining Indonesia's export outlook. Less export revenue means less demand for rupiah, and by generally making investors more risk-averse. Beyond these, Indonesia's own economic currents are at play, especially trade. For most of the past 2 years, Indonesia benefited from high prices of the commodities it exports, like coal, palm oil, nickel, and rubber. Those booming exports earned the country lots of foreign exchange, supporting the rupiah. However, by late 2023 and into 2024, global demand softened and commodity prices were off their peaks. Indonesia's trade surplus shrank, and the country's current account, the broadest trade measure, swung from near balance into deficit. In 2024, Indonesia ran a current account deficit equal to about 0.6% of GDP, a notable change from just 0.1% deficit in 2023. In simple terms, the nation was earning fewer dollars from exports relative to what it spends on imports, meaning fewer net dollars flowing into the country. A smaller trade surplus, or a deficit, tends to weaken a currency because it implies lower demand for that currency in global markets. Bank Indonesia projects the current account deficit could widen further to between 0.5% and 1.3% of GDP in 2025 if exports remain under pressure. Contributing to this trend, exports to China have been slowing as China's economy has cooled, and Indonesia's import bill has risen with an improving domestic economy and potentially new imports of US goods as part of the trade negotiations. All of this means the fundamental flow of currency is a bit less favorable for the rupiah now than it was during the commodity boom. Now, let's talk about whether this will be a problem. A weaker rupiah immediately raises the cost of imports, everything from staples like wheat, soybeans, and cooking oil to machinery, electronics, and refined fuel. Because Indonesia still relies on foreign purchases for many essentials, importers must spend more rupiah to bring in the same goods, putting upward pressure on consumer prices. So far, headline inflation has remained a modest 1 to 2% in early 2025 thanks to temporary government measures. But if the currency stays weak, analysts warn that prices for everyday items, especially imported foods and fuel, will rise, eroding people's purchasing power. Fuel is particularly pivotal. Indonesia's refined fuel imports mean that a falling rupiah forces either costlier subsidies, straining the budget, or higher pump prices, as seen in late 2022 when price hikes pushed inflation above 5%. For businesses, the effects split along export and import lines. Exporters who earn in dollars, such as palm oil producers, coal miners, or tourism operators, benefit because each dollar of revenue converts into more rupiah, boosting local profits and international competitiveness. Even sectors like hospitality can see gains as a cheaper rupiah makes Indonesia a more affordable destination. However, exporters that depend heavily on imported inputs, for instance, garment manufacturers importing fabric, see those cost increases offset their dollar windfall. And if global demand is sluggish, say fewer coal orders from a slowing China, lower prices alone won't translate into higher volumes. So, this is the trillion rupiah question. Is the rupiah's depreciation likely to spur a wider economic crisis or long-term problems for Indonesia? Based on the evidence we have reviewed, the answer leans towards manageable challenge, but not a full-blown crisis. But anyway, do let us know what you think. Thanks for watching.